Why is the market up today?
I'm not quite sure. You know, clearly there's an inverse correlation between the market and oil. That's been true 12 of the last 13 trading days. Today, I'm not so sure. People are probably, there's a bounce here, which I think makes sense. Maybe the market's a little bit oversold. But I also think, I have to say, it's going to be hard for the market, in my opinion, to make a lot of upside progress until some of these things are resolved, particularly oil.
Where's Brent? Brent's 115.
Yeah, so the spread's likely to widen meaningfully over a long period of time because the U.S. is so self-sufficient.
We're self-sufficient, but it's the price is set globally.
Right. True. But if we had more refining capacity in this country, we
might be able to weather
we could almost disconnect ourselves, and it's. I know that wasn't part of the plan, but it's in a weird way it could be really good for the United States.
It would, and all the countries that aren't helping us that.
Yeah, that's occurred.
Serve them right.
That's occurred to me too.
Yeah.
You know.
Oh, you're not going to help? Okay.
Yeah.
You can pay 150.
It's almost hard to believe, frankly, on that score.
No, it's not.
Yeah.
For Europe?
Yeah, I mean,
it's hard to believe they're not.
Yeah, no, I guess I'm in this situation. I thought that maybe they might step up, you know, but it's not happening.
They're taking the summer off.
Yeah.
Over to the coast of France.
Yeah, exactly.
I mean, at this point, is the belief that these exogenous geopolitical events, we've always, in the past, sort of been inured to the notion that it won't last and it won't derail a strong market every other time. I don't know how many times you can go. And it's always the Middle East.
It's all true.
Like. Yeah, there's always a problem. And it seems like we always get through it. But, you know, NASDAQ's down 10% at this point.
This one may be a little different to the extent to which and I think it might last longer. We got conditioned. Venezuela was like a long weekend, I think, or the first attack on Iran last summer was obviously very short. But this is a bit different because even if, in my opinion, even if the war would end tomorrow, from what I've been reading, the damage to the infrastructure in that region is significant. So you have natural gas plants that won't be online for another 5 years. And I also think, even if the war were to end tomorrow, the cost of moving through the strait is going to be up meaningfully, either from an insurance or shipping perspective. So in that way, Joe, I think this is. I don't think it's fatal, you know, to the market, but I do think that this will last longer, and it's going to raise the cost of capital because we're going to have to issue a lot more debt. And people are going to have to, I think people are tightening up their credit standards.
But then think of years from now, if it were to be a successful outcome, and I don't think anyone, God, what I read, no one even gives that a possibility at this point. And the peace dividend that could come from a Middle East that didn't have Iran there, just stirring up 47 years of just troublemaking and
killing Americans.
And repressing the Iranian people and everything else. I mean, it could be good, but so just let's not talk about the war just for a second. How about the economy? Can we talk about what the Fed does without talking about the war? Can we talk about inflation?
I think it's hard not to talk about the war when you talk about the Fed right now, just because obviously.
What about the economy?
In my opinion, though, and I may be a homer here, but I think the one big beautiful bill is highly stimulative and will lead to significant productivity gains in the next couple of years, which will tamp down questions about inflation. So I think that part is quite good. As far as inflation goes in the short term, the quicker this is over, the more prices can come down, the easier it'll be for the Fed at some point to resume easing. It will ease at some point this year, but it's a lot harder for the Fed. And it's a lot harder for incoming Chairman Warsh.